Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SIMCERE Pharmaceutical Group Limited Annual Report. SIMCERE Pharmaceutical Group Limited is a leading investment holding company in China that specializes in the research, development, and sale of pharmaceutical products. The company's product portfolio includes a range of therapeutic areas such as oncology, central nervous system, autoimmune, anti-infection, and cardiovascular diseases. The company's principal products include Sanbixin, Endostar, ENWIDA, COSELA, Iremod, Xin and UXIN, and others. These products are manufactured and sold to distributors, pharmacy chains, and other pharmaceutical manufacturers in China. In addition to its product offerings, SIMCERE Pharmaceutical also provides promotional services for pharmaceutical products. The company's business scope extends beyond product development and sales. It also engages in the manufacture of pharmaceutical ingredients and property management. With a strong presence in Nanjing, China since 1995, SIMCERE Pharmaceutical Group Limited has established itself as a major player in the Chinese pharmaceutical industry. SIMCERE Pharmaceutical Group Limited market capitalization of $35 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that SIMCERE Pharmaceutical Group Limited holds a significant advantage in their industry. SIMCERE Pharmaceutical Group Limited trades at a higher price-to-earnings ratio of 22 times and a higher price-to-book ratio of 3.21 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company maintains a moderate leverage profile, with liabilities making up 39% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline for a pharmaceutical company can be attributed to several key factors. Revenue growth is primarily driven by the innovative pharmaceutical business, which has seen significant increases in revenue, with growth rates ranging from plus 26.6% to plus 53%. The commercialization of innovative drugs and the expansion of global research and development efforts have also contributed to revenue growth. Additionally, international collaborations and overseas licensings of in-house pipelines have expanded the company's global presence. The FDA approval in 2021 and subsequent approvals in China have enabled the company to tap into new markets, leading to increased revenue from innovative drugs. The upfront payment from AbbVie, option fees, milestone payments, and tiered royalties on net sales have also contributed significantly to revenue growth. On the other hand, revenue decline is primarily driven by a decrease in revenue from other fields, with a decline of minus 18.7%. Commercialization service income and research service income are also expected to decline in 2025 compared to 2024. Overall, the company's revenue growth is largely driven by its innovative pharmaceutical business, while revenue decline is attributed to a decrease in revenue from other fields and a decline in commercialization and research service income. The company's financial performance is a testament to its operational efficiency. One key indicator of this success is the generation of positive operating cash flow. According to the latest figures, in 2025, the company generated $1,014 million in net cash from operating activities, demonstrating a clear ability to produce cash from its core business operations. This positive trend is further reinforced by the fact that the company's operating cash flow is consistently strong due to its effective management of trade and bills receivables. The recovery of these receivables within 1 year ensures that the company has a steady influx of cash, which in turn supports its overall financial health. As a result, it can be confidently stated that the company is generating positive operating cash flow, a crucial indicator of its long-term sustainability and growth potential. The performance of various segments within the company has been mixed, with some showing significant improvement and others struggling to keep pace. Segments that performed well include neuroscience, autoimmune and comprehensive, retail grassroots, and anti-oncology pharmaceutical business. The latter saw a notable increase in revenue growth at 37.4% and profit growth at 78.3% from 2024 to 2025. Additionally, the other business segment experienced a substantial boost in revenue growth of 54.6%. On the other hand, segments that performed poorly include anti-oncology and other business. The anti-oncology segment struggled overall, while the other business segment saw its profit growth decline by 64.1% from 2024 to 2025. Management is outlining a clear vision for the company's future. The key takeaway is that the company will be propelling its Innovation 2 strategy in 2026, which suggests a significant shift towards more innovative and effective practices. This new approach is centered around the mission of being born for the patients, indicating a renewed focus on patient-centric care. Management also emphasized the importance of differentiation, implying that the company will be setting itself apart from competitors through unique offerings and services. Furthermore, there is a commitment to accelerating the translation of innovative drugs from research and development, R&D, to clinical trials and market launch. This suggests a streamlined approach to bringing new treatments to patients more quickly, which aligns with the overall mission of improving patient care. The company's financial records indicate a clear trend of dividend payments. Specifically, in 2025, the company set aside RMB 467,226 as dividend payable to equity shareholders. This allocation suggests that the company has made provisions for distributing dividends to its shareholders. Furthermore, the record also shows that the company paid out RMB 390,746 as dividends paid during the year in 2025. These figures demonstrate a commitment to rewarding shareholders through dividend payments. That concludes the financial summary for SIMCERE Pharmaceutical Group Limited. Feel free to comment below, and I will be happy to answer them when possible.